Hi, this is Alessio Rostani of Leading Trader. Hope you're well. We have an interesting situation here on the British pound, and I think this is a market and it's a chart which every trader and almost everybody should be looking at, because what happens to the British pound from here is going to essentially show us how we move forward from Brexit. All right. So what I think is going to happen here on the British currency will have certain massive consequences for the UK economy and possibly how things move forward in Europe and the US. Firstly, before we look at the charts, I want to first of all bring this to your attention. This Thursday, July the 14th, the Bank of England is going to make a big announcement, as you can see here from this calendar. So at 12 p.m., July the 14th, the Bank of England is going to make its decision on whether to cut interest rates or to hold interest rates. Currently, the UK interest rate is at 0.5%, but institutions believe that this Thursday we'll see a rate cut by the Bank of England to 0.25%. So the consensus seems to be that we have a rate cut this Thursday. The question is, will the Bank of England actually deliver on that? And I have my doubts, and I'll tell you why in a few moments. So let's go back to the chart. So long term going into September, I expect the British pound to eventually fall from where it is right now. I think by September we'll see this wave 3 target being met here at 1.2. I think we'll see 1.25 to 1.2 on the British pound by September of this year. So long term, I remain bearish on the British pound. However, in the short term, I expect to see some surprises here. Let me explain what I mean. You see, firstly, the British pound is extremely oversold. All right, we're still oversold here on the RSI. And so far, we've not yet had a relief rally even to test the 21 EMA, or even, let me show you, if we do a Fibonacci retracement from the highs, from the pre-Brexit highs to the lows of last week, you will see that we've not even had a retracement or pullback to the 38.2% Fibonacci level here. Okay, that would put up a 1.36 on the British currency. So in the short term, what I expect is going to happen is we're going to see a surprise move in the British currency, which is going to take out a lot of short sellers. All right, and we could see then a potential relief rally back to these resistance levels, which we can use as shorting opportunities. But let me just go back to what I was saying about the Bank of England decision on the interest rates. My personal view is the Bank of England may delay the decision to cut interest rates this month. And the reason is, for one thing, we've already seen a panic move in the British pound. We've seen the pound drop from 1.5 to 1.3. Everybody expects, the institutions expect the Bank of England to cut rates. Okay, so that decision is already baked in to this move. Now, I think the Bank of England may think, you know what, we don't want to scare the markets any more than we've already done. Okay, so they may delay the decision until the next meeting on the interest rates. If that happens, then we could see a relief rally back up to test these resistance levels, again, between 1.36 to 1.35, the previous highs here. And potentially, we may even get back up to the 50% retrace at the 1.39 level, although I think that is less likely. I don't expect it's going to happen. But bottom line is this. Even if the British decides to cut interest rates, even if they do that, the fact remains, as I've just said, that that decision to cut rates is already baked in to this move, all right? It's already priced into this huge move to the downside. Institutions already expect it. So I think potentially either way, whether they cut rates or decide not to cut rates, we could see a surprise move to test these levels. So my plan simply going forward is any moves, any rallies back up to test the 21 EMA at this point, the 38.2% retrace at 1.36 can be shorted. And if we get back up to the 1.39 to 50% retrace, I will be aggressively getting short on the British pound. Very wide stops are required here on the pound because volatility is going to be very high, as you'd expect. So short term, I expect a counter trend pullback to test some resistance levels. But long term, I expect the downtrend to continue on the British pound to 1.25 to 1.2. For more up-to-date analysis on the major markets, whether it's indices, currencies, commodities, or stocks, make sure you try our free trading service on Leading Trader on this link you see here, which is leadingtrader.com/alerts. And when you join, you will also learn our top trading strategy as well. All right, guys, many thanks. And for more videos like this, please go ahead to this link and subscribe now.